Hi people, this is the solution to problem 10b-3. You have it from before, but I'm narrating it for you here. You're best served by going to page 407, following each transaction with me as I narrate the body of material that is necessary for competence here in Chapter 10. If you saw the Chapter 9 problem, that's going to be of great help in understanding this one. It's simply the reciprocal, which means equal but opposite, insofar that now we're wearing the hat of a buyer, not a seller. Chapter 9 dealt with sales and cash receipts. Chapter 10 deals with purchases of merchandise and cash payments and some of the ramifications that go along with merchandising in general. So let's get going right away here so we won't hold this too long. The first transaction, again, go to page 407, October 1. We paid half the amount owed to Hitch from a previous purchase. Well, quickly, I'll go down in the subsidiary ledger. I'll quickly find Hitch's account down here. And prior to this, this is all posted, but prior to this, there was a $1,200 credit balance in the subsidiary ledger for accounts payable. So that, as you can see, the transaction's already been posted, which means we're paying off that $600, which is half of the balance of 12. Now, with respect to that, we cleared out the entire, by debiting accounts payable. Of course, you reduce the account payable as you would reduce any liability, and as you see, it was posted to the subsidiary ledger by that check mark there. It will also be posted to the control account in the general ledger, which is account number 210. The complication, if you want to call it that, is that the 600 is still being paid to us within whatever the discount period was, and they offered us a very generous 5% discount. But it's going to be taken on $600, which is half of the balance due. So they're allowing that discount to go through because it's being paid inside the discount period. So the discount is $30, which is 5% of the 600. That's a contra revenue. Remember, let me get rid of that word computer purchase discount. Well, I don't know if that's merchandise or not. Okay, but at any rate, the purchase discount is a contra purchases account. We use the purchases account, or in this case, it's merchandise are computers. We buy and sell computers, so we could either use a purchases account or specifically a computer purchases account, and that's the merchandise account. Okay, so when we do our adjustments and closing at the end of the period, whatever is left in the computer purchases account is the amount that would go to the merchandise inventory account. But getting back to this, we're going to clear the 6 because we're paying half off. So we debit to reduce to wipe out the 6, but it's only costing us $570. So that's the reduction to cash, credit cash to reduce cash, and the contra to the purchases account, the computer purchases account would be the computer purchases discount account. It's like the sales discount account, only the opposite, where that'll be subtracted as a contra purchases account when we calculate our net purchases. Now, the second one here on the third, this is not merchandise. We don't buy and sell trucks. So simply what we do is, if we're buying an asset like we would buy any asset, we simply debit the trucks account. We're not selling the stuff, so we don't call it purchases. We call it delivery truck. But when we buy computer purchases, okay, we're buying computers as inventory, and that's why they label the account title computer purchases. Okay, which will get the balance of which would get transferred into the inventory account after we account for the sales of the purchases, which requires a lot of different bookkeeping. But you'll know that the purchases is a cost account. At the end of the period, whatever is remaining in inventory goes over to the balance sheet, and the rest of it gets cost out to cost of goods sold. However, so if you're buying a truck, not inventory, you debit truck. If you're buying merchandise, you debit purchases. It's a cash purchase, so there's no accounts payable involved. You're paying cash. You got to reduce cash. There's your description. Purchase merchandise, okay, for cash. Okay, so that was on the 6th. On the 10th, again, a merchandise purchase. And again, they are abbreviating for you so that you'll understand whatever's left at the end of the period will go on the balance sheet as merchandise inventory. So even though it is a cash purchase, we still record the purchase. We haven't recorded a credit purchase yet. That should come up, I hope. Okay, but that's a cash purchase. Fine. $650, that gets added to the purchases account. As we said, the purchases account has to be reconciled at the end of the period. Whatever is left in inventory, we take an inventory and put the balance of the inventory and call it merchandise inventory on the balance sheet. Now, apparently here we did we sell to Zeke? Did we buy from Zeke up here? Where the heck is Zeke's purchase? Accounts payable, hits, delivery truck, computer purchases, cash, computer purchases, cash, accounts payable, Zeke purchases, discounts, cash. I've got to read that one, huh? Kids, we have to read that one in the book. See what they did here. Okay, let's check it out. Problem 10B3. It says paid Zeke Company. The amount owed less a 5% discount. So apparently the purchase was not made in this problem, but rather would have to go find Zeke's account down here. Here he is over here. So back on August 1st, apparently we had purchased merchandise on credit, where we debited computer purchases and credited Zeke accounts payable. That was the transaction that occurred that resulted in the $1,400 credit to the accounts payable account in the subsidiary ledger, showing that at that point we owe Zeke $1,400. And now this has been just posted where we pay that off. Let's go back to the transaction on the 24th. Let's go back to that transaction on the 24th so that we can see that $1,400 wipeout. So here we are going back to the journal. We're on the 24th. We were able to take a 5% discount on the $1,400. Okay, so don't forget it's a 5% discount, and the 5% discount equals the $70.70, which is subtracted from the $1,400 to arrive at the amount of cash that we paid. What happened to the cash credit? I'll stick it in. We should be good. All right, so the credit is to cash because that's how much we paid the guy. That should be in caps. Okay, so to pay an account payable when there's a discount, you debit accounts payable to clear out the whole amount. Because you're getting a discount, you pay that much less, and then the credit is to purchases discounts, which is, again, a contra to the purchases account. Okay, computer purchase discount is going to reduce the cost of inventory. We're going to reduce the cost of purchases. So there's the $1,330 that we pay. This has nothing to do with merchandise. It's just a general transaction. For your review, we paid rent, Debit rent, credit cash. We paid utilities, debit utilities, credit cash. Nothing to do with merchandise. Apparently, we made a purchase from Seagate at some point, and I believe that you'd have to go to the subsidiary ledger, and you would find Seagate's account of $700 from a previous purchase that was carried forward to already done and entered for you in your ledger, in your work papers. You'll find it there. And now what we're doing is we're paying half of that $700 and clearing out $350 from that account. I don't know that. I believe the problem here is we don't get any discount on this because because we paid half, or even if we paid the whole thing. This is an old account, so we lose any discount that we might otherwise have been entitled to take. Okay, so there is your problem. I would have liked to see a purchase of merchandise on credit, which if you did one, you simply would, and I'm not going to make up a journal, you would simply debit purchases or whatever. If it was computer purchases, I'll just make it all caps. If it was computer purchases, you just debit in computer purchases. All right, and then you'd find your money column if you made a computer purchase, whatever date it is. If it was $1,000 purchase, you would debit the $1,000, and if you were buying it on account, you'd come back here and you'd credit ACCTS payable, ABLE, and you'd have to name the supplier. The people that we buy from are called our suppliers. So let's suppose that it was Zeke, right? So we would take Zeke in here and put that. All right, and if he offered us a discount, we probably put 5%. So I don't know what the terms are, but if you say 5, let's say it was 10, if those were the terms, right? 5, 10. Remember from the chapter 9, you do colon. Net means you'd have to pay the whole amount if you don't take advantage of the discount within 30 days. So that would have to put net 30 if that's the case. Okay, so that's what we would do, kids, if we had to record a purchase. And why he didn't put one in here is beyond me. However, we'll try to fix that by putting a purchase in down here for $1,000. All right. Now, if the guy took a discount and paid it right away, okay, if the guy took a discount and paid it right away, what would you do? You'd take the $1,000 out. I'm going to abbreviate here just to speed things up, right? Accounts payable. Okay, accounts payable. So if we're paying the whole thing off, let me tab that over. Where are we now? Okay, if we're paying the whole thing off, we got to clear out the $1,000, don't we? So that would be on the debit side of the journal. And if we're taking a 5% discount, if we're taking a 5% discount, all right, I don't want to screw this up here. Can we get up here? I can't get up here without what? Without moving that down. Hopefully. Okay, let's see what happens here. Yeah, it's doing it. Okay, so if we were taking a 5% discount, we'd credit purchases discounts or computer purchases discounts. So I'll just abbreviate it: purchases discounts, EISCOUNTS. Okay, so C-O-U-N-T-S, C-O-U-N-T-S, okay, and we come over, and that's a credit item. Thing is formatted, damn it. Okay, with credit purchases discounts for $50, and that would be 5% of 1,000. 1% would be 10 times 5% times 5 is 50, and then the net amount that we would pay would be $950. So that would come out of the cash account. Okay, CASH, and again, we're going to make that $950, and we'll try to get it over here someplace if we can. If we can tab that over. Good. All right, so you can see that what we've done for you is we fudged in a purchase on credit with the payment being made within the 10-day discount period. Now, had we not taken advantage of the discount, guys, then we'd have to pay the whole $1,000. But mind you, the $950 clears out the $1,000 credit that we set up over here. So we owe the guy $1,000, right? We owe the guy $1,000. Pop, pop. Okay, we owe the guy $1,000 per here, and then we wipe him out over here, even though it only costs us $950. And that 50 is going to show up on the income statement as a reduction to the purchases account. It will ultimately reduce the amount of inventory that we report because we didn't pay $1,000. Okay? So those are your transactions, and I added one that should have been in there anyway. And now we won't put my postings in, but you can look at the subsidiary ledger. This guy had a balance carried forward. He still owes us $1,350. Hitch, remember, he paid us half the $600. So Hitch, I'm sorry, we paid him $600. So we still owe him $6. We still owe Seagate over here $700 minus the debit. Of course, reduces accounts payable. You know that accounts payable is a liability, so when you debit it, you reduce, it's a credit balance, you reduce the credit balance to a $350 credit balance. Zeke, we paid off in full without taking, I don't know if we took the discount, it doesn't matter. We settled out his account with a full $1,400. So that's the subsidiary ledger. Okay, and as I said, the additional task at the end of the period would be to list out those accounts from the subsidiary. You can go up and see that they're all there, and they sum up to $2,300. Now, again, a case in point, again, part of the body of knowledge here is that you prepare a schedule of accounts payable, just like you prepared a schedule of receivables. You prepare a schedule of accounts payable from the subsidiary ledger, and that amount has to tie in. We're in the general ledger now, okay? And that amount, $2,300, as you can see here, has to tie in with the accounts payable. Again, this is called, you won't see it in a solution, but this is called the control account, accounts payable control in the general ledger. And then the balance of 23, one more time, has to be in agreement with the sum of the accounts, individual accounts from the subsidiary ledger. Now, the rest of this stuff here is simply general ledger posting. We already went through the subsidiary ledger, the accounts payable ledger, as it's called. We already went through the balances in the subsidiary ledger. Now, as to the general ledger, which we're in now, the cash account number 110, they already carried a balance in there. You made a bunch of payments. You didn't collect any money. You paid $570. You paid $6,500 and $3,100. And they're all from the transactions above. You can trace each posting in, and that would give you a cash balance of $1,820, which of course would go to your balance sheet. That's an asset. Remember, we bought the delivery truck. That's not part of purchases. Okay, it's an asset. Account number 150. This is the accounts payable account, which shows us the activity that we performed in the transactions. All were payments. We paid $600. We paid $1,400. We paid $350, leading us to that, right? $2,300. If I had posted in that extra $1,000 from above, right, I would have a credit of $1,000 in there, which of course you know is an addition because it's a liability. What you would be doing is if I took that Zeke, I'd have to add in the 1,000 and make that 3,300. But I did forego doing that not to mess up your problem. But remember, if I had posted that, where is it? I did it up here someplace, okay? If I posted that $1,000 to accounts payable, you'd see it in the accounts payable account and you'd see it in Zeke's account. So if I came down to Zeke's account, wherever that is, there he is there, I would have added in, right? I would have added in another credit for $1,000 there, and he would have been $2,400. Okay, and then the accounts payable account in the general ledger would have also been increased by the $1,000, and that would show the 23. This is your purchases account, okay? We could have, if we were in a different accounting system, a perpetual system, we could have simply called it inventory. But the system that they're using is called a periodic system, whereby we use a purchases account, and at the end of the period we reconcile it out to determine how much purchases are left over, and that amount would go to the inventory account on your balance sheet. So that during the month there were 2 purchases made, okay, one for $3,100, one for $650. I think they were both cash purchases, but nonetheless, there they are. There they are in the purchases account, so that the purchases account $3,750. So at the end of the period, we'd have to determine how much of that $3,750, okay, is left over, and that amount would be adjusted out of the purchases account and placed into a merchandise inventory account, which would show up on your balance sheet. And here's the computer purchases discount account, which has a credit balance. And why does it have a credit balance? Because that account is a contra purchases account. Computer purchases discounts right here has a credit balance of 100. That's going to be subtracted from the computer purchases account in order to get net purchases. Okay, so that's about it. These other postings came from those random transactions. You paid your rent, you debit rent, you paid your utilities, you debit utilities, and there's your account balance. Again, there's your schedule of accounts payable from the subsidiary ledger that has to tie in with the accounts payable account in the general ledger, and that amount, of course, goes to your balance sheet as a liability. Okay, kids, now your homework's got to look like this, and that's been the case all along. When I send you the B series of problems, they're going to look like the A series that I assigned, or I should say, the A series that I assigned should be mirror images, pretty much, of the B series, which I have already sent you. Okay, so I've got more to come, and then an announcement with respect to the final exam, which is going to be posted in a couple of days or so, and then I believe it's all due next Thursday at some point. Okay, thank you. Sorry to keep you so long, but Here it is. Hopefully it's helpful to you.